Hey guys, it's Tyler from Modern Rockefeller here with another video today. Today I want to talk to you guys about two terms that sometimes people ask me and they get confused, and it's ETF and mutual fund. A lot of my friends come to me and ask, hey, I've heard mutual funds are really good, safe, low risk way to start investing that their parents have done, etc. And ETF is a little bit newer of a term, so we're going to explain those. First of all, mutual funds, that's probably what you might be invested in, or your parents invested in for you, or you might want to look to invest in. What it is, it gives you the option to diversify and not just pick one stock. You can buy as little as 10 stocks in a given sector of an industry. For example, a couple months ago, the really hot sector to be in was oil because the prices were really low, and we've seen since then a ramp up and a lot of profits have been taken on that. So say you wanted to get into the oil sector but you didn't want to bet on just Chevron, and a mutual fund could give you the option to invest in the oil sector. A step above that could be if you want to invest in a whole industry. Say you want to invest in the entire financial industry. The mutual fund gives you that option to invest in those 50, 60, what have you stocks, and really you're not betting on any single stock, so your risk is lower. However, there is a caution with that: your reward or your profit's going to be lower because you're so thinly spread out that any one given stock doing really well is kind of like a drop of water in a bucket. It doesn't make that much of a ripple compared to the rest of the water, right? If you take a mutual step, one step above that, you can invest in a whole market. For instance, the S&P 500. But there's one caution that I want to give you with this. Yes, it will greatly diversify you and limit your risk, but in recent years, given the past 3 years, we've seen the S&P 500 trading like this. About 3 years ago, it was on a steady incline, and then ever since, we have seen dips and peaks trading in what we call a channel. The stock has not broken above or below very much of this channel. And if you bought at any price point in this channel, you haven't made very much money compared to the rest of the market in the last 6 years. So there is some caution with that. One thing I will say is there is a difference in prices, and that's where I want to get to the ETF. An ETF gives you the same option to diversify in a given sector, industry, or a whole market, such as the S&P 500 or Dow Jones, with one benefit. A great benefit is that with an ETF, an exchange traded fund, you get to sell it and buy it like a stock. So you can sell it right then. You don't have to wait until the end of the day like a mutual fund. And you're not getting charged 2 to 5% commission on the value of your trade. You're getting charged a flat fee. For instance, if I want to buy an ETF, it costs me $5. If I want to buy a mutual fund and it's worth $5,000 that I'm putting in, and it costs me 2%, you can see where that gets into the hundreds of dollars. So not trying to sell anything, but it makes more sense to me to go with an ETF. So I hope that explains a little bit. If you have any more questions, comment below, or subscribe to the page. We're going to have a lot more videos coming soon. Thanks.